What's going on, everybody, and welcome to another weekly update. And what I'd like to do in this video is to provide you guys a state of the market and some stock picks for the upcoming week, to also include events. And I also provide daily updates as well, because we know that the market can pivot each and every day on any given news. So if that sounds like something you're interested in, consider subscribing. So let's go ahead and get into state of the market. Essentially, the market has been waiting for Powell and Jackson Hole to determine where to go from here. We had two back-to-back 75-point basis moves. The headline inflation has come down to 8.5 from 9.1, which is great, but 8 from 2 is still quite a ways to go. So with that being said, we came into this week really anticipating what Powell's going to say. We didn't have a lot else going on. Yes, there was a lot of data. There's a lot of really bad data. There's some really bad housing data that's starting to come out. So housing is slowly starting to turn over, which is a very slow moving industry when it comes to any kind of rollover. So I think we are just starting to see the rollover now with that side of the house. Now, being said, what is the next big thing going into this week was Powell in Jackson Hole. And he came out on Friday very worrisome. Now, his general statement was the same like many other things. I've said this many different times. He can't put out any direct information. He's not going to say he's going to come in at 75 points or 100 points or 50 points or 25 points. What he's going to say is he's going to judge his judgment off of data. But this is something you have to see. The track record of data, something I always say and something you always have to pay attention to is, yes, they say data, and so you can try to interpret it how you want to interpret it, but you have to understand that generally the market is still very high. Just because we're hitting expectations, you have to realize that if they miss expectations, they're going to lower it so much so that it looks like they still know what they're doing, when in fact inflation is still extremely bad. That is a problem. Yes, the economy may be great, but there's a lot of underlying things that don't add up. Yes, there's the consumer is there and well and great, but credit cards are up. Credit card growth rate is up to like 35%. Right? Jobs are up. It's great. We'll find out this upcoming week because we do have non-farms this upcoming week. Let me actually pull this up as I'm speaking here so you kind of understand what's going on throughout the week. But with that being said, we had Powell, and he came in saying that that companies and families are going to see a lot of pain in the upcoming months. Now, what does that mean? That means that inflation, and Powell said this straight out. This is his first statement before he even went with his normal general statement that he gives that, hey, we're waiting on data to interpret it, and that's what we're going to go off of. But he came out with this such hawkish and nasty approach, in my opinion, that families and businesses are going to see a lot of pain. Now, what does the pain look like? Pain looks like interest rates are going to be piled on until inflation gets down to a very reasonable rate. Now, there was mentions of roughly around that 4 or 5% for a while. We need to chop what we currently have in half. And we're not going to do that with a 25-point basis move. We're going to do that with at least another 75, 50 points, maybe. 50 points, I think, is maybe not this particular meeting in the end of September, but the meeting after that, maybe we could hit a 50-point basis move. But I think we still need another 75 at this point. And so that's the statement that he had. Again, I think the market took it originally as, okay, well, that's not that big of a deal. Powell's come out with his regular statement until they digested what he originally said, that the pain is yet to be felt. And so, with that being said, the market digested that. Obviously, it took about 30 minutes, and the market just really started flooding down. And upcoming, what we have this week, we're going to get a lot of insights. There's going to be a lot of what I consider the weighted, what is going to be the weighted events, and that is going to be your EA core inflation. So we're looking at the ECB and trying to see their core inflation comes out Wednesday, 5 a.m. Eastern Standard Time. That kind of gives us a little bit of insight of how bad we're going to get it. Again, last time we thought we hit peak inflation, ECB came out and they did not hit peak inflation, and that's what really scared the market and caused some major selling after a pretty big rally as well. And so we're kind of looking for that this Wednesday again to see if that's going to be it. Then Friday we have non-farm payrolls. That kind of gives us a little bit of insight into what's going on there. But again, even though things maybe seem to get better, this is what I try to keep reiterating, is even though it seems like it's better because it comes in waves, you have to understand that if the Fed is combating inflation, that means they're going to continue to raise rates. They're going to continue to push at a fast pace, and you have to understand that is that's lagging, right? Like that data is going to be lagging because companies are starting to cut back. They're going to cut back even more and more and more, and this is where that whole that pain for families is going to be at, because it's going to be hard to find a job. People are going to be getting laid off. Nobody's going to be hiring. So you're spending, right? Demand, you're going to get in demand destruction. And then that comes into the whole thing with deflation because no one can buy because they're running out of savings. Savings rates are at one of the lower points that we've seen especially over the pandemic and stuff. And then the credit card rates are up extremely high, right? Once people max out their credit cards and realize they don't have any more savings, it's going to be a major, major issue. And so this is the pain that Powell is talking about in companies, right? You're going to start seeing a lot of major companies that sideline cash they've been sitting on for the pandemic. They're going to start implementing that and buying some of these better companies at dirt cheap prices. Now, have we? The next question you might have, right, is, well, have we seen a bottom yet? I know that's a question I get all the time. And to be honest, I don't know. Right now, we're still, technical wise, we could potentially be in a bullish setup. So you can't buy one side or the other because we don't have enough data. And it's something I keep trying to reiterate. I know we went through 2 years where the market just went up. It doesn't do that, right? And right now we're in a bad state. Yes, the economy is not the stock market, but there's still a lot of unforeseen aspects here that are starting to play out and have a lagging, having essentially that lagging data that we're not seeing yet. And that's something I've said, Q3 earnings is going to be important because you're going to start to see more of an impact, especially if we have another 75-point basis move and then turn around and see what that last report we're going to have before heading into the end of the year, which I to be honest, I wouldn't be surprised if we do rally towards the end of the year. And then beginning in next year, we just completely flush. It takes time, and it may take that much time, but we don't know for sure. Again, time will tell. But upcoming earnings, again, we got the Fed meeting that's towards the end of September, which is coming up very fast. You're going to have the ECB, which comes out next week. Then you're going to have the core CPI, comes out the week after that. And then you're going to have the FOMC meeting. And then as far as upcoming earnings, again, we're coming towards the tail end, so there's really not a lot. I got CrowdStrike here, but that's one that might be okay, depending, playing continuation on that one. So, and as far as watch lists, again, general stuff here. But if you haven't noticed, SPX, they're pricing in 109 for this week. And that's telling you a lot. With the flush that we had this past week, there's going to be even bigger move. So the premiums to the put side is going to be extremely high going into this week. Again, to really capitalize on any kind of options plays, I think it will be this week. And then if we continue to flush hard, you're going to that premium is going to be so built up by the end of the week. If this is a bloody week, which I think thinking is probably going to be, by the end of the week, you want to be able to purchase puts because they'll just be too expensive. The premium is just going to be way too high. Again, if we flush, I guarantee that number will be extremely high by next weekly update. Tesla looking at a 6-point move. Again, had stock split over this past week. Want to see with Tesla what is going on there as far as how it's going to move after the stock split. Anytime you're diluting shares, the stock doesn't move as much as it used to. And so that's something I want to keep in mind and something I want to watch in the coming weeks and see how that plays out. BA 8-point move, JPM 4-point move. Now, a lot of these moves they're building in a lot of premium because of what's happening, because of Friday, because of what we're going to see, and something I really want you to pay attention to on the technicals. Now, you may be a technical person, and I'm going to forewarn you, I am partially technical, but I am very event driven. If you don't follow events, in my opinion, you are not, you're going to hurt yourself in the long run, because technicals definitely do not play out all the time. And I'd say there's, I believe there was a 75% chance that a technical will play out, maybe a couple decades ago, but that's diluted ever since. Now you have algorithms that read headline news, and if one event triggers that algorithm, you're going to get this is where flash crashes and stuff come in, because the algorithms trying to sell shares, sell its positions because of any particular news events. So that's something you do have to watch out for. So that's pretty much what I got as far as that. So let's start to look at the technicals now that I just said that. All right, our attempt to even make a higher low was right there, and we flushed, right? We got Powell, and that flushed it. So we did have this break. We did technical wise, right? We hit that top line and just started selling off. It is a higher low. Something to keep in mind. Are we going for a lower low is the question in turn here. And so for me, if you look at this higher time frame, you can say, okay, well, Marcus, well, why would you be bullish? Well, technically, right, this could be your higher high here. And then as long as we can stay essentially above this, in my opinion, about the 3,800, if we can stay above here somewhere, that could be interpreted as a higher low to go to a high. So that's why you can't say it's going to be, you can't be bearish or bullish on a situation. You have to play both. You have to be neutral. This is where I say you have to be neutral a lot, because of the fact that technical wise, it could go either way. So as long as it can stay again above that, roughly around that 38, which if you're going off of these the way I've been mapping out these basis point moves, again, something you got to go back in my videos and watch them, and why I have these marked. Every time we mention a 75-point basis move. Now this isn't given in total, right? This is given off of every rate increase decision. Essentially the market will move to that zone, right? And so anytime a 75-point basis move is mentioned, they price it in, I think, roughly around the 3,800. So the market will move to that 3,800. As soon as it touches that touch point, it seems to turn around there and start moving up. If they price in a 50-point basis move, right? When we thought when inflation came down, people were like, ooh, well, there's easily, maybe it's just a 25-point basis move. I don't know why I have 24 on there, but nonetheless, it moved up, right? We've come down. Maybe that means we're going to dial back. No, that's not the case. Powell extremely hawkish. We haven't felt the pain yet. And they've been talking about a 75-point basis move leading up all week to Powell. I know they had some data that came out Friday, but none of that matters. The Powell incident. This is why I talk about weights, and the weight shifts. It's not ever the same. It shifts just depending on the sentiment and the current events and what's going on. This is why it's not just easy as just looking at data and interpreting that way, because again, depending on how the situation, right? This is why I do daily updates, because it changes all the time, and the market focus shifts very quickly. So something I've learned throughout the years is it shifts quickly. So again, one thing that may have mattered a month ago, or even last week, or even yesterday, it won't matter tomorrow or today, just given the situation. So with that being said, coming into this week, technical wise, if we are looking at 75-point basis move, I expect us to head right towards that 38. So we got a lot of selling. This could be one of the bigger moves. This is what I talk about this week. Monday could be a perfect setup for the downside. We want, if it can't, I'm kind of expecting the market, if it doesn't gap down, to try to push up to the 4,100. If it can't hit 4,100, that's going to be a concern. This is because a lot of these moves we've had there's been all the way coming all year. A lot of these, as soon as we get bad news, there's been no bounces. We just straight flush. And so that's what I'm kind of, we have to see how we open on Monday. If we can't open up above the 40.85, we're definitely going to see some heavy selling, especially going in the ECB inflation numbers. I want to see how this starts taking place. But core level, or some of your support levels, obviously you're going to have the 4K mark is going to be your first, the psychological level. Is going to hold right there. You get a nice bounce out of there. Again, we want to see if it actually does bounce. And then you have the 38.94, and then down to the 37.84. And I think we're going to end up here by the end of the week, especially if there's bad ECB day core data. I think we're going to head down to that 3,700 mark. Again, this is something I want you to watch, and I saw this earlier, and this is what was concerning. And I always talk about this if you followed me at all. When you break, now we've essentially had these nasty bars. Now, okay, your 50 EMA, we had the break, had the push up, and then the flush down to the 200. Of course, when you hit major supports, you're going to get a big bounce, the retest of the 50. Now your candle is opening up below that 50. So it doesn't mean it can sell all the way back down to the 200. It could very well make a higher low. 3,800 roughly is kind of where I'm talking about. I mean, you can get pretty close to that end. I don't think it could maybe only hit 3,900. But again, really just depends. I think it depends on the day, on the core inflation and what happens with our inflation, or the ECB inflation and our inflation. Will kind of determine or dictate where we go from here. If it's bad, I think we're going to potentially see a lower low here. But it's something to consider here is these are monthly candles and the wicks, right? You have to understand this because it could tag like below here. Say it could break and hit 3,500, and it could wick whack back up by the end of the month here coming into September. So we have to see really how that plays out. But I don't like this. And again, anytime you break, you're going to get a test and then a retest of what was old support. And then you'll get a nice flush down. And again, we could just sit around here. We may not make a lower low. That's what I'm trying to say here is we may not make a lower low. We may just hover around this area. But it really depends on the panic, right? How panicky is the market going to get being in a recession and people starting to see job losses more and more in Q3, potentially even a lot in Q4, right? If this starts getting bad, this can really start flushing. But again, really just depends. Another 75, we've 75-point basis moves is already historic, back to back, right? We're talking back to back here. Now we're 3 back to back, potentially. It could be bad, right? And the market might actually realize that and then really start flushing down. And then at that point, when you start hitting panic mode, like nothing makes sense anymore, and it's just going to flush. And then at that point, you just wait and see. So we have to see again if we do break 200s normally on. Now this is normally technical wise, you'll break, and then normally you're going to get a reversal at some pretty quickly after that 200 break. Not to say that that always happens, but on average, you normally get a pretty good reversal. So that's why I'm really looking closely to this break, to this push down, because either we're going to make a higher low or we're going to break that 200. Maybe we flush all the way down to 3,500 in middle September. And then we turn around and we wick, and then we start heading back up again. Could potentially happen. And so that's why this dip for me is going to be very, very important. I think this will be, in my opinion, getting out financial advice, but the dip to buy, if that makes sense. Because if you do break, again, I think you could break, retest, and then keep selling. More likely, what I think is if we break and we open up below the 50 EMA, I think we're just going to kind of hover close to it. Now these are higher time frames, so you're talking like a 200-point span here, but we could fluctuate around here and then end up turning around and pushing back up. It could happen. We have to see. Again, a recession. There's just a lot on the table to really uncover it, and it will take time, right? You can't predict what's going to happen with inflation. Inflation is too it's too volatile to really determine that, but we'll see from here and see where we go. But that's essentially what I got for the SPX. I think the SPX, very interesting, a lot of room to sell. So again, I'm looking for the retest on that one. Bitcoin does not look good. I'll be honest. You're going to get a revisit of the 18, at least. But we have to see as far as if we break that. If we break that, then you're looking at your psychological levels. You're looking at the and I think at these high levels, you're looking more at the 5K increments on sell-offs, as opposed to just K or two for pullbacks. So as we moving pretty volatile, especially with these higher numbers, these 20K Bitcoin numbers and stuff. So again, a little watching. We'll say 19K just to average up, rounding up on that. But if we break that 19K, if we can open below 19K, I think this thing is going to flush pretty good from that point. I think once you break that, I think you're going to get panic again. It's just like the general index. If you break that, you're going to hit panic, and that's not going to be good. Oil, again, pushed up to 92. It was below 90. Now it's back up. I think that's going to continue to run. The dollar in itself had a massive move up this week. It did sell off yesterday quite a bit, so we have to see if the dollar picks back up. Tesla. Again, this one's going to be interesting moving forward, especially with the stock split. We want to see how this moves, but looking for a break here, roughly around that 276. If we can break that, you got support at 256. You got some support here at 225, and then go from there. Now Tesla is one of those ones that I don't know how much this can flush. We could come all the way back down to the 209 potentially. Again, we are out of earnings cycle, but if this does break here, I think you're going to solid flush down at least 255. We'll see if it holds there. Again, it depends on market sentiment. If market's still really bad, you may even get a push down to the 222. I think if you get at that level, it's going to be a wick and then potentially head back up. So Tesla is very stable, in my opinion, for the most part. So I don't think you're going to see any dramatic loss in Tesla at 140. I'm not saying it can't happen. Anything is possible. but I don't think you're going to see that. I think we could get one quick more visit down here. That's why I'm saying this last pullback might be the pullback before we have a nice rally or potential reversal in the stock market. It's not saying the economy is going to be better, but the stock market, I think, could potentially reverse at that point. So we have to watch and see how far this leg comes down. Again, it really depends on the panic in the market and how people are going to interpret that. BA, again, going to look like the market. This one, same thing. It's got a lot of room to sell. I think we're going to end up here by close to the end of the week or midweek for breaks 157. Then you got support here at 141, 133. You got gap here, 122. So kind of watching those levels for BA. JPM is the next one I got. If I could find it, that'd be great. JPM. So this again, this is why I talk about you can't go off of technicals. Breakouts we should have made. Normally you would make 75% of that breakouts, and you normally make back about 150. So we haven't done that. We broke out, we attempted, and now we're just dying again. This thing could potentially flush back into this channel. Something to watch moving forward. But JPM has to hold 115. If you can't hold that, again, you got support at 110. Break stats. I think you're going to make a much lower low here. Again, you may be looking at 100 point JPM. But if it does hold up, you got resistance here at 120, and then potentially a push up here to 128. So kind of watching those levels moving forward. But that's pretty much where I want to leave it. I wanted to keep this general. Because there's a lot of market sentiment going on in this video, and a lot of things that are holding weight moving forward. But you can't bypass what Powell just said. It's extremely important what he's saying, that we haven't seen max pain yet, and we're nowhere even near max pain because these numbers of everything looking fine and dandy, it's not underneath the hood. You have to understand that underneath the hood, it's a hot mess, and that we're just starting to see the beginning signs of that. And especially with the continuing spending and when I've talked about the money circulation, that Ukraine in the U.S. And that revolving door that's essentially kind of helping the U.S. From seeing overall devastation, and I think it's holding the dollar up because of that circulation there, as they try to figure out what's going on or how they can attack inflation better. But on the same tune of things, you also have Powell attacking inflation to try to get it down. So those 75-point basis move is going to continue to be hammered in there. And until it comes down closer to at least that 4 or 5 is where the Fed is trying to at least get it. And if he's done 2 75-point basis moves and it's barely even moved, you have to understand that there's going to be a couple more big moves before that really starts to make an impact on the inflation. And that's in turn combating inflation is going to mean there's going to be a lot more layoffs. There's going to be a lot less jobs. Saving rates are already bad. Credit cards are already getting pushed up. Even the CEOs of credit card companies have been saying they're very concerned about what's coming up. So all that being said, if you've made it this far, I do appreciate you. This has been a very long video. I have chatted about a lot in this video, so go ahead and drop a like. Until next time, I'll see you guys later.